Good morning, folks. It's Harry Swaminathan. In today's video, I want to look at this Baidu trade. So this Baidu trade we put about, I would say, 10 days ago, or slightly more than that, maybe 12 days ago. And I know we have a couple of new subscribers. So just to give a background, Baidu was a bull call. So if you can see, we've bought the 95 call and we've sold the 100 call. And at that time, there was about 70 or 72 days left to expiry. Now there's 59. And we put it when Baidu was around $90. So it's come down. So this trade is gone against us. You can see we have a loss of $745 on this trade so far. Of course, we do have time, and it's a bull call spread, so it's a debit spread. So our risk is only limited to how much we paid for the spread. But let's see what are the things we can do with this trade. So first of all, you can see that the long call, we paid $4.25 for it. And today it's trading at $1.75. And then our short call, we received $2.71 credit. And today it's trading at 96 cents. You can see our short call has made a profit of $17.50. So there's a few different ways you can deal with this kind of situation depending on what you thought Baidu is going to do. Now, obviously, everything is dependent on your outlook for the stock. So over the next 60 days, what do you think is going to happen with Baidu? And to be honest, you have to look at the charts to get a feel for what is going on with Baidu. So this is the Baidu chart. It's a 3-month daily chart. And a couple of things we can notice on this chart. So first of all, you can see I have the Bollinger Bands here on in the yellow. And you can see that the Bollinger Bands are constricting. So what that's telling you is that when Bollinger Bands constrict, that means its price movement has been really narrow and it is somewhat like pressure building up. And what it will do is it'll once the pressure builds up like that, it'll pop, and it's going to pop either to the upside or to the downside. Now, which one is it going to pop? You have to base your decision on other factors. So let's look at, I'm going to zoom in here, and let's look at this situation. So here we can see it yesterday, it clearly went below the Bollinger Band and then it bounced back. And so, you can see the low was 83 and today it, yesterday it closed at 85.17. And it's closed on higher volume. You can see the last 2 days have been higher volume. And clearly you can see this one is a down bar on higher volume. So support started coming in right here. And then this bar clearly shows that you have support and it's gone up. So that's one indicator. The other indicator that I think is interesting is the RSI. And it's in oversold territory right now. So you can see it's below the 30 mark. It's in oversold territory. The MACD is not really saying much. It's the difference between the signal and the MACD line is flat, and in fact, it tried to make a slightly bullish run but failed. But now RSI is in the oversold territory, and it's looking, and it's from yesterday's trade, it's starting to look up. Bollinger Bands clearly show that support came in yesterday. And two, the Bollinger Bands are constricting, so which means pressure is building up on the stock, and when it pops, it's going to pop. So my opinion on the stock is that I think it's going to take a bullish run. Now, of course, all of this depends on the overall market. So whatever the S&P does, most stocks are going to follow that. So anytime we analyze stocks, you always have to put that caveat there that every stock has a beta, and therefore every stock is going to behave somewhat consistent with the overall market. And especially as you know that there's there's a mini crisis in Europe again with Cyprus requiring bailout. I don't think it's a big deal, but at least temporarily markets may go down. Okay, so but I think in general, Baidu is going to take a move up. So given that that's our outlook, then what can we do to this trade? There's a couple of things you can do. First of all, you can double up now, because if you see here we paid almost $1.50 for this spread. Right now, that spread is worth about 80 cents. So we can double up, make this a 20 contract position, and pay only 80 cents for the new 10 contracts, and that would reduce your cost basis, and you would still have a bull call. If Baidu turns up, that's great. So that would be a conservative way of adding on. It's not really conservative, but it's probably the safest strategy out of the 2 or 3 strategies that are available to us in this situation. The second strategy would be, and this would be a little aggressive, you see we have a profit of 1750 on this trade on the short call. We can take it off. We can book this profit of 1750, and it so happens that the long call has 1750 as its net liquidation value. So which means the value of the 10 long calls that we have is worth 1750 right now. So if we wanted to book this 1750 by closing the short call and just letting the long call run, that is a perfectly acceptable strategy, and you would basically now you would be risking 1750. Otherwise, you would be risking the difference between the two, which is about 800 or 900. But it's a pretty good strategy. If you think Baidu is going to turn around, and over the next 1 week or 10 days, if Baidu goes from 85 to say 89 or 90, then your long calls are going to do very well. So that's not a bad strategy. You can do it. It's a little bit more aggressive than the previous one. The other strategy that you can do is you book your profits on the short call, and then on your long call we are down 2,495. Know that. So let's go take a look at what options are available. So if you feel that over the next 59 days Baidu might make a move up, but it's not going to make a huge move up, then what you can do is a third type of adjustment to this trade would be, let's go to the Analyze tab, and what you could do is look at the options. We are in the May series, and on the call side, the good thing about Baidu is you have $2.50 strikes. So here we are with our long call. We would close this short call and book the profit 1750, and then we could potentially sell this. So when we sell this, we are booking 2000, let's say 2.35. So that's 2,350. So what we would be doing is something like this. So let's say we did this. So we sell a vertical, and the vertical will be, you're selling the 92.5 and you're going to buy back your 100. So you're going to get a credit of $1,380 on this trade. So we are selling the 92.5 and you're buying the 100. So what that does to your risk profile is it turns it into a bear call. So now you can see that our max profit here is going to be a negative $160. Now why is that? Because that's the difference between let me go back to the monitor screen. So if you can see that we have a loss of $24.95. Let's say it's $2,500, right? And then if we come back to Analyze, by closing, by turning this into a bear call, what we are doing is picking up this credit at the 92.5. So we're picking up only 2.35. However, our loss on the other one is 2,500. So that's the difference. But what you're doing here is, if Baidu doesn't come up to 92.5, then you've reduced your max loss to 160. So I don't really like this trade, because you're going to convert it to a bear call, and then it's not really getting you any kind of a big benefit. Your max profit that you can expect from that trade would be a negative 160. So I'm not too crazy about that trade. But I do like, so I'm going to take this off, but I do like the other two trades. So which is, one, you can double up on the spread itself, and two, you can close out your short and let the long call run. So if you did that, if you closed out your short and let the long call run, remember now your delta, your position delta is going to be 252, because you would have closed out this 155. Right now it's at a 96 delta. You would straight away jump to a 252 delta. And if you just doubled up on the spread itself, you're going to be 96 into 2, which is about 185 or 190 deltas. So my preference would be to do the double up and move this to about 190 deltas, and try to capitalize on the move. That way we would have reduced the cost basis. We still have time. We still have 60 days. So time decay is not having a big impact yet, but it will, as we approach 30 days, it will begin to have an impact. But we still have time, and we don't expect to hold it for another 30 days. Perhaps in the next 2 weeks, if we can get a move, we'll come out of it. Now remember, we have a loss on this position. So whenever you can never say whether your position is going to go in a profit or loss. And when you do have a loss, you have to try to come out of it as best as you can, hopefully at least a break even. So that's the goal with trades that have gone against you. Hopefully you can come out with a profit, and that's what we're going to try to do in every one of our trades, to turn the losers into a winner. But you're not always going to be able to do that. If you can bring most of your trades at least to break even, that's great. And that's what we're going to try to do on Baidu. So today I'm going to put this trade. I'm going to double up on my spread. So we'll end up with 20 contracts. For those of you who are new, I wouldn't recommend you enter this trade. This is purely for educational purposes. And you can see how this trade has gone against us, and what we are going to do to come back to break even. So that's what we are doing on this trade. If you have any questions, please send me an email. Thanks.